told you. I think this guy is listening to my videos. I said it would be a 0.5% cut. I said that it's going to move away from inflation to now unemployment. I said that they're going to front load this. And it happened exactly the way I said it. And I also said that the meeting afterwards, he's going to create a type of narrative where things are okay, soft landing is happening, and for the short term at least, we're in a good place. So what happened at the meeting? What are the implications? And what was the general understanding of what he said? But before that, where are we with Bitcoin? After the cut, we saw a very nice rally. It's broken a resistance line, and we're looking to see where the 65.2 is going to be. That's going to be an interesting area. Watch out for that carefully. So the Fed did a historic 0.5 cut. And they stated specifically that now inflation is not an issue and unemployment is a key factor they need to look into. He stated specifically that inflation has been brought down quicker than they expected and that now unemployment has to be supported. That's why they did a 0.5 basis point cut. What was interesting in the meeting, though, he said that if they had gained the unemployment data in the previous meeting, they would have done a 0.25% cut. So I guess this 0.5 is to combine both together to front run the issues with the unemployment. What was interesting is that 2 out of the members in the Fed actually said to hold off on cuts, and the rest were pretty much unanimous in creating this cut. What is also important is the dot plot, which shows the future prediction of cuts that they're looking to do. And what is actually incredible is that it looks like there will be a 100 basis point cut more by the end of the year. This is significant. This is actually extremely significant because it has never in the history of the US has this ever happened. Ever. This means that interest rates look like they're going to hit 3.25 or 3.5%. And it also looks like by the end of 2025, interest rates will be around the 3%. This all looks positive for risk assets and risk on assets, but it makes you think, is there an underlying problem here that the Fed sees? Because the interesting thing is, also the reports show that unemployment is going to peak around the 4.4 to 4.2%, which is suspiciously below this line. This, by the way, is the SARM rule, which has predicted 9 of the previous recessions that I've come across. And that percentage is just below that mark, which is quite funny. So what do I think about this Fed meeting? I think it's ultimately bullish. I think it's going to bolster a lot of risk assets. I think there's going to be a slight turn away from the Magnificent Seven because it's expensive to buy those and the returns are getting lower and lower. I think this is extremely positive for Bitcoin and altcoins. But I will say one caveat here, and this is important. Things are good because of this rate cut. Things are going to be bringing liquidity into the market, which is great. But things are not fantastic. See, this could potentially only be good for the short term. And I say that because there are a lot of issues in the future. It will be interesting to see where the next jobs report, which will be in the first Friday of October, comes out and what it looks like. If that looks like things are slowing down, this is going to be an extremely bullish event and it should cause all risk assets to explode. But I have an inkling that it's not going to come in good. And I think they're trying to front load this as quickly as possible to be able to support the jobs market and to be able to bring liquidity into the economy so these companies can afford to keep these workers. We will see. We'll see what happens. But I'm Alvarez, a 7-figure crypto investor. Like, follow, share. Come to my lives. I've been talking about this thing before and afterwards. And I will catch you guys later. Peace.